Well, the stock market gapped, it ramped, and it camped at a high level today. But there are some interesting things taking on with the internals that suggest that we might not have follow through on today's up day. I'm going to be going over that. I see some bullish charts and some bearish charts. So we're in this kind of decision-making period. My name is Michael Silva. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's video is going to be shorter. Bear with me here. Going to be flying through some charts. Let's get into it. All right, welcome back. We're going to start off looking at the market dashboard. You can see here Dow, S&P 500, and NASDAQ all up on the day. What do you know? You already knew that most likely. Technology was the leading sector. Down there at the bottom, energy and financials. Also utilities coming in there third to last. Now, energies and financials, they've been on this monster run. If you haven't watched my previous video where I went more into detail on the weekly recap, you can go back and kind of get an idea as to what I was thinking around that. But as of right now, the start of the week, we see technology leading the way. We saw yields slightly pull back. Energy and financials there at the bottom. Now, this was a very interesting day. We saw an up day in the market. It's not like a crazy day. Tech did get a big move to the upside. We're coming into Tuesday. Tuesday is known as Turnaround Tuesday. But what I want to call out here is the VIX. You can see down 9.88% today. Got crushed to the downside. But what I find very interesting is a big move to the downside like this. We didn't really see any all-time highs take place in the market. And there wasn't that big of a day, generally speaking here. We did get a gap, ramp, and camp. But to see this big of a down move and the VIX close lower than it's been for over a year, and then the market didn't really respond all too, just enthusiastically about this, is a little bit of a cause for concern for me. But keep in mind, we're coming into this area of support, this gap fill. So this is kind of why I'm saying, look bullish. Are we going to have follow through? Well, we'll look at some more charts here. Here's the NIAD, the NYSE Advanced Decline line. Notice here on the 30-minute time frame, which we'll get into the 30-minute charts, you can see it opened up here and we went down as the market continued to ramp up. So that's a negative divergence, stating that we're seeing a move up here in the S&P 500, but the internals are getting weaker. That right there could be potentially a bear flag. Also note breadth. So this is the NIMO. Breadth was down minus 21.66 today, and the market moved higher. This looks like it's setting up for one of those turnaround Tuesdays, but you don't know for certain. What I'm just trying to say here is be careful in this environment because the market looks like it's a little confused right now. And then on top of that, we had that big gap up in the dollar. Not really crazy big, but we had the gap up in the dollar to start the week, and then we had it crushed down to the downside. You would think that the move down to the downside would benefit gold and silver. Gold and silver were slightly down on the day. I think silver looks a little bit weaker today than gold did. And then also the move down here does help the S&P 500 as well. We're still within this bull flag kind of pattern. So let's see here if we can eventually break out and head up. Right now, though, the longer term trend is still down, but the short term trend is bullish. We hit this area of resistance. Perhaps we come down a little bit more, but the 50 and the 20 are starting to slope up into this, which could mean that the dollar could find some strength here, but we'll continue to monitor that. On the NASDAQ, the Qs, they had the strongest day. They up 1.88%. And what I want to call out here, which when we get into the 30-minute time frame, so this is the daily, it looks like a bear flag is forming. Okay, so we have this pull to the downside. We're kind of finding move to the upside. This could be potentially a bull flag or bear flag, sorry. We had this area as support, this area as support. We found this one first, boom, to the upside. Let's see if we can get some follow through. We're still below the 50-period moving average. And then on the 30-minute time frame, what we need to watch out for here is this inverse head and shoulders. We have a left shoulder, head, right shoulder still building out. We need to get above the neckline to feel confident in a move so we can get more of a push to the upside. We got to get above 324 here on the Qs. Till then, we're putting in low, lower low, and a lower low right here. So keep an eye out for that. Now, here is the INDU on the daily time frame. Dow Jones, 32,500 is holding his support. If we break down through that, I think we come test 32,000. Those are the key levels that I'm looking there. Here's the Dow Jones on the 30-minute time frame. We're looking at the ETF, the DIA. Bear flag, we have a pull to the downside, and now it's consolidating. So a break above 328, that can be a bullish sign that we're getting out. And then also a breakdown from 325 could be quite bearish. So right now we're currently in a channel. I would say this looks like a trade in momentum. So if you get a breakdown to the downside, you might get that continuation follow through. If you get a break to the upside, we might see a push to the upside. So that could be good. S&P 500 on the daily time frame, bullish overall context, and you have this little bull flag forming here. I think our main target to get above to see that breakout is 39.50. So let's watch for a daily close above 39.50. However, on the 30-minute time frame, there's that bear flag. So you have this pull to the downside. You have a high here, a lower high, and a lower high. This could be potentially forming, like I said, a bear flag. If we break down, then the target would be right around 387.50. If we take out that level, we'd have to go fill this gap, and we can head obviously a lot lower. So understand what I'm saying here is we have the VIX getting crushed into an area of support, which typically you want to take profits in these type of areas when they're at areas of support like this. Doesn't mean that we can't go lower. The downside target is 17.18, so we can still head lower, which could push the markets up higher. However, we have that internal weakness that I've been saying on the NIAD and also the NIMO. And then we have, bullish structures, but we also have bearish structures forming. So just a lot of confusing taking place. Let's look at gold right now. Gold down slightly on the day. Interesting. Dollar had a down day. Gold had a down day, but it's been finding strength here at 1675. It's been putting in higher lows, so that's a good sign. So it's still holding, but this could also be a potential bear flag. So still a lot of work to go there in gold. Silver does not look nearly as good as it once did right here in this position. Could be a fake out, but this is a bear pennant, and we just broke down on the daily time frame through that bear pennant. We're below the 50-period moving average, which is not the greatest sign. That would say that the immediate downside could be right into 24.48, 24.50. So we'll keep an eye also on that. And then we got Bitcoin also. It's putting in lower highs right here. This could be a topping type pattern. We're not 100% certain here. So we need to see a breakdown below 52,500, and then it could get below the 50, and then we could see some immediate selling take place. However, as it stands right now, we're just kind of going sideways and putting in lower highs. So this means the lower highs right here means bears are getting progress to the downside, but yet bulls are still holding up this level at 52,500. So let's see how this one plays out. I don't see a good trade to the upside or the downside in this current position, and most of the charts that we saw today. Now, that's all I have on today's market brief. Just be very careful out there. Clearly, I say that very frequently. Here, this move, once again, it looks like it could be a potential just shock down to the system, but we do have all these Fed speakers coming up, so we got to be mindful of that coming into the week. We had weak internals, but yet a good upside day, and we're seeing bullish charts on the daily time frame. Not there necessarily, but bullish charts here, for example, on the S&P 500. However, some bearish patterns taking place in the SPY. So watch these key levels, watch for breakdowns or breakouts of them to get that continued momentum. That's all I got for you on today's show. Thank you.